Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, March 1st. We got a lot of economic news to go over today, so we're going to jump right into it. We got the personal income for the month of January. So back in December, we had a 2.6 increase in the personal income. We figured that was going to come down a little bit to about 2.6, and it actually a little bit more than the forecast. So obviously not great news. We always like to see people making more money. Then we also, on the other hand, had the consumer spending for the month of January. And back in December, we saw 0.1% growth. And we had a forecast about increase a little bit, 0.2, and basic came in at forecast. And then we got the Fed's favorite gauge for inflation. This is the PCE, personal consumption expenditure. This is the core. So basically, we're stripping out the food and energy, which creates the volatility in there for the month of February. And we had a zero back in January. We figured there'd be a increase of about 0.2% and it only came up 0.1%. So showing very tame here. The year over year is actually about 1.3%, so very low, where the Fed's gauge for rates is about 2.5%. So keep that in mind here. Then we got University of Michigan's consumer sentiment. We have two revisions, two reports. So this is the revision for the final revision for the month of February. And we had a 76.3 earlier, reported earlier in the month, and we figured it would remain about pretty close, about the same, 76.4, and it came up a little bit higher. So a little higher than report, so good. People feeling a little bit better. So this is obviously a good sign right here. And then we got the manufacturing on the ISM for the month of February. We had a 53.1. So just remember, anything above 50 is a expansion. Anything below is contraction. And we figured it'd come down a little bit, and it went up. So good numbers on the manufacturing side at 54.2. Now we have construction spending for the month of January. We have a 1.1 in December growth. We figured kind of slow down a little bit, and it slowed down much worse than we thought. So this is something we want to keep an eye on to see if that trend continues. Maybe it's a seasonality type of thing with the construction spending, but definitely something we want to keep your eyes on if construction spending keeps going down. All right, so let's jump over to the headline news here. And so we got here, the stock market's currently mixed a little bit. The S&P and Nasdaq's been down pretty much all morning so far, but the Dow's been kind of up and down, back and forth. As I did this, it was up slightly, and then as I'm also continuing to do it, it's been down. So it's been going back and forth a little bit. Some other reports that came out on a global level, we had the Chinese manufacturing slowing down, and then also Euro factory activity slowing down. So it's not just here in the U.S. We're seeing this kind of on a global level, that some further slowing down on a global level here. And then also tonight we got the sequester deadline. This is where we're forced into cuts in the government spending of 85 billion. And again, that only if you've heard me from before, it's only 2% of our budget. So a lot of investors are not really looking at too much, only because I feel like the government is trying, the politics are trying to make it to be like Armageddon type of thing, but it's doesn't seem to be as really that big because it's not 2% is not that big overall of our budget, and you got people out there trying to say make it sound like it's a life or death situation, and don't get wrapped up in this media hype on this sequester deadline. So we probably, if anything, we could probably do with the cuts and plus more, primarily because we've been doing increase in spending. The government's increasing their spending 14% every year, and this is only 2% of that. So let's jump over to the bond market, see what's going on over there. And as a result of today's economic news, we started the morning up higher. We kind of have this star effect here. We are touching on the upper trend line here. And we do have to be careful here. As I mentioned, every time we've come up here, we bounce down. And this could sling us down to the 102 mark if we're not careful here. So we do need to be careful. We could end up back down here again if we don't get above this sometime soon. And a lot of the experts out there are also kind of thinking that we will see worse before we get better again, before we get up to the 104 level. So it's very possible here, but just be careful. But rates are a little bit better today as a result on the short term here, so be cautious. And you guys have a wonderful weekend. Thanks for watching. And rates are slightly better today, even though it's down 3 basis points today, but we are starting higher than where we left off yesterday. We left at 103.53 and are currently at 103.63. So again, have a wonderful weekend. See you guys on Monday. And If you guys also like to receive these on a daily basis, stop by mikesdailymarketreport.com. There's a subscription in the upper right-hand corner. Have a wonderful day. Bye.